On February 28, 2026, Dubai's luxury nightlife was interrupted by a reality the city spent decades convincing the world was impossible. Iranian missiles streaked across the sky, retaliation for the initial US and Israeli strikes on Tehran. These strikes targeted specific pressure points. Intercepted weapon debris ignited fires at the Burj Al Arab and hit Amazon data centers, instantly knocking out the consumer apps and banking services that the city's economy depends on. This skyline represents over $1 trillion of concentrated wealth. It is a baseline of regional stability international investors have relied on for decades. The impact of these strikes reached far beyond the UAE, hitting global markets within hours. With the Gulf under fire and the Strait of Hormuz blocked, oil prices surged toward $120 a barrel, pushing U.S. gas prices to $4 a gallon. Dubai functions as a primary physical connection between global capital and Middle Eastern energy. When the city's urban infrastructure is threatened, the resulting uncertainty immediately flows directly into the global supply chains that dictate the cost of living for everyone else. The economic paralysis began with the shutdown of international travel. Within 72 hours, the world's busiest international gateway effectively ceased operations. This chart tracks that collapse. 37,000 flights were canceled in a week, while daily tourism spending dropped by $600 million. Markets reacted with equal severity, as this red deficit zone highlights. $120 billion wiped out, plunging the Dubai index 16%. At Jebel Ali, the region's largest port, the flow of goods stopped entirely. Logistics networks froze, stranding international cargo as Gulf insurance premiums skyrocketed. Premier financial districts like the DIFC emptied as Western firms evacuated their staff. The corporate sector, a cornerstone of the UAE's diversification strategy, was hollowed out as international banks prioritized employee safety. These metrics track the sudden disappearance of Dubai's most valuable commodity, its reputation for absolute security. When the city's image as a safe harbor dissolved, the economic justification for its premium prices went with it. The choice to target Dubai was a calculated move by Tehran to demonstrate the vulnerability of its neighbors' economic networks. For years, Dubai functioned as a dual hub. It courted Western capital while simultaneously processing sanctioned Iranian wealth and oil, a strategy that allowed it to thrive on both sides of regional tensions. This map shows the physical reality. UAE ports sit dangerously close to the Strait of Hormuz. Iran used this proximity to retaliate against Gulf states hosting Western forces, striking infrastructure within sight of its coast, holding the UAE's economic lifelines hostage. This dual hub model proved to be a fatal flaw. By serving as both a Western financial center and a conduit for a sanctioned neighbor, Dubai became the most logical target when those two worlds collided. The conflict is now spilling into the lives of the millions of migrant workers who sustain the Gulf's economy, particularly the massive Indian diaspora. An unprecedented evacuation effort followed the strikes, with 220,000 Indian nationals forced to flee the war zone and return home. The economic fallout followed these workers home. Southern Indian states saw their financial data nodes dim as $40 billion in annual remittances suddenly vanished from the national economy. The disruption of these jobs immediately cut the primary financial lifelines for millions of families across South Asia who depend on a stable Gulf for their survival. Buildings can be repaired and data centers can be rebooted, but the market's underlying psychology has fundamentally shifted. The myth that Dubai was immune to Middle Eastern conflict has been punctured. International investors now have to account for the physical risk of war when committing capital to the region. We are already seeing the impact in the real estate sector. Property sales volumes fell 25% in the first half of March as international buyers shifted to a wait-and-see approach, demanding price cuts on high-end foreign investment properties. The events of February 28th forced a permanent reassessment of the UAE's status as a safe haven. The world is now watching to see if Dubai can survive as a global financial sanctuary while sitting on a front line.